Welcome back, everyone, to the Energy Update Weekly for the week ending the 27th of August 2022. And this channel again looks at trends last week in the oil and gas industry. And so let's go look at the graphics and see what happened last week. So again, we start out with oil prices. We are tracking West Texas Intermediate crude, or WTI crude, which had a closing price 18 hours ago of $93.06 a barrel. Last week at this time it was $92.09 a barrel, so up 97 cents a barrel. Okay, so 0.58%, but back up again. When we look at the yearly trend for WTI, again, you can see a year ago it was much less, down in the $60 a barrel range, and then of course spiked early, well over 100 for a couple of months, and now has been slowly coming down with a lot of ups and downs and spikes in that, which is pretty much how it happens. So probably is not going to make an impact at the pump, these little fluctuations like this, but we'll keep an eye on it and see what happens next week. Okay, so last week the total rigs running in the United States drilling for oil and gas increased by 3. There was a 4 rig increase for petroleum drilling and a -1 in gas, for a net increase of 3. So these numbers are pretty consistent in the 760s. Last week 765. So the last month and a half they've been over 760. We're just, as we go into through September, closing out third quarter 2022, and then in the fourth quarter in October, November, December. In the past, it is relatively normal that a lot of oil companies will increase activity in the fourth quarter. There's reasons for that. Tax things, they have to drill leases or they expire, and whatnot, and so we will continue to watch this and see if anything increases, if activity increases through the end of the year of 2022. Okay, total frac spreads last week were 7 additional from the week prior, so 287 last week. And if you look at these numbers all through this year, they would probably be averaging right around that 280 a week. And so overall pretty consistent with week-to-week fluctuations. Again, no huge continual increase, no huge continual decrease, but it's been pretty steady, which is good. Okay, we look at the EIA website, Energy Information Administration, and we're looking at the price of regular gasoline, dollars per gallon. If you recall, last week we looked at this data point right here, and it began to tail off a little bit of the previous trend where the prices were coming down following a curve, something like that, and then they started to level out a little bit, and this past week that trend continued. And so the price is still coming down, but at a much lower rate. So U.S. average price $3.88 a gallon. Here in the Black Hills of South Dakota, we are considered a Midwest. We're $3.73. I don't know what it is at the pump. West Coast, $4.85 a gallon. So all I can say is good for them. Highway prices for highway diesel fuel actually was pretty consistent, maybe even up a little bit last week. So again, that relatively steep decline over the past month and a half, and then leveled off. And so nationally, $4.90, $4.89 it says for the Midwest, and in fact the pump prices are the same this week as they were last week in most of Rapid City, $4.84.9, so $4.85. Again, West Coast $4.55, and good for them. Okay, so we want to look at stocks real quick. Again, the gray area is the 5-year range of U.S. Stocks, crude oil stocks, and we have been most of this year operating below the 5-year average, and in the past month have just come up into the very bottom of the 5-year average. So last week, or the week ending the 19th, again, these data Today's the 27th. These data are for the week ending 8/19, which is a Friday, and then those data are compiled and released on the EIA website at 1 p.m. my time on Wednesday, which was the 24th, just last Wednesday, and this is Saturday morning. So these values then are 1 week in arrears. This is what it was a week ago on Friday, a week ago yesterday. So 422 million barrels of crude in stock. That is down 3.3 million barrels over the week and 10.9 million barrels over the year. And if you look at gasoline, distillate, and propane, they're all downward trends. And so this is potentially concerning. We're just going to have to keep an eye on that. The stocks, you can see in this graphic, are low, and the petroleum, we'll see in a minute, is continuing to be pulled out of the Strategic Petroleum Reserve when there is really no need to do that. And so production is pretty steady, but we're losing stocks and we're losing our petroleum reserve. And if we look at those numbers, here's the balance sheet in stocks. Again, crude oil, 875 million barrels in stock, and that is down 11.4 million barrels, or 1.3% over a week ago. So again, the stocks are decreasing. Motor gasoline, 216 million barrels, and you can see again the different formulas, reformulated, conventional, whatever. Carojet, about 40 million barrels. Distillate fuel oil, broken into the classes of the 15 ppm sulfur and under, this is the highway fuel, so about 101 million barrels, so down slightly, 1.7%. And then the 500 ppm sulfur, the farm diesel, off-road diesel, that was up 11%, and that probably makes sense because a lot of areas of the United States have been, are, or will be starting harvest soon, and so the fuel consumption is going to increase, and these stocks are picking up probably for that reason. Okay, production last week continued really strong, 12 million barrels a day, so a little fluctuation. Week prior was 12.1 million barrels a day. Crude oil input to refineries, so 16.255 million barrels into the refinery. So again, 12 million barrels of oil produced a day in the U.S. Where does the rest of that come from? Well, it's imports. So here's imports, about 6.2 million barrels per day coming in as imports, and that was all crude oil. Exports, about 4.2 million barrels per day. There's what's called stock change, and you end up with this value of 16.255 going into the refineries, which again is going to be pretty close to that 93.5% utilization on the refinery capacity. Okay, so finished products last week then, a total of 19.3 million barrels, and you can see the list here of what that was. 8.5 million barrels of finished motor gas, so you can get in your car and go get groceries. 1.6 million barrels of Carojet, about 4 million barrels of distillate fuel oil, and so that is what is being produced. And you can see just a week ago it was 21. But it was 19 before that. So this value again is going to fluctuate, and these are such large volumes, and with activity that is going on utilizing the end product of this, it fluctuates as well, and so they try to match what they are projecting for the next week, and adjust their amounts going in and out of the refineries to meet those needs. So we will continue to look at these and watch these going forward. Hopefully not having any issues with that. Okay, we've been looking at an oil province each week just to look at what's going on with various production areas across the country. And this week I'm going to do the Utica Shale. You can see the counties that are listed in here. This is in Ohio. So the Utica in Ohio, western Pennsylvania. I don't know how many of these rigs are in either of these areas right here. Looks like maybe just one or so. Yeah, here, that's a number. So one in Pennsylvania, the balance of these are in Ohio. 12 rigs running, which is the same as it was a year ago, so this must be a pretty consistent area. 100% are horizontal and 100% are gas. They are deep, greater than 15,000 feet, so depending on where they are in the basin, this basin, they can be drilling anywhere from the vertical well would be a couple of thousand feet to where the vertical well might be 14,000 feet. It just depends on where we are. So we want to look at an article from geology.com. This was put together by Hobart King, who is a registered professional geologist, just looking at the Utica. And the Utica is Ordovician, Middle Ordovician. This is about 450 million years old, and it's a black calcareous organic rich shale. So it is interbedded, essentially black shale and limestone or limey calcareous type units. This map over here, the green is the Utica Shale, and so you can see eastern Ohio, a lot of West Virginia, parts of Virginia, a good portion of Pennsylvania, and up into New York. The yellow line here is the Marcellus Shale that we looked at last week, and it's the extent of that. And so the Marcellus does not have as large of a footprint as the Utica. The Utica is underlying the Marcellus, and so it has a greater extent in the basin, which we'll look at in a second. Okay, so the United States Geological Survey has completed an estimate of products that are in the Utica Shale, and their mean estimates of undiscovered, technically recoverable, unconventional resources indicate that the Utica Shale contains about 38 trillion cubic feet of natural gas, about 940 million barrels of oil, and 208 million barrels of natural gas liquids. That is a lot. 940 million barrels of oil, that's a trillion barrels. That's huge. And this again is consistent with these shale formations that we've been looking at over the past several weeks. They all have these huge numbers associated with them. They just are going to require a commitment by this nation to say, yes, we are going to get this resource, and then we go get it. We've got plenty of oil. It's there. We just have to commit to getting it out of the ground. So when we talk about drilling in a basin, a sedimentary basin, I want to show you this cross section here if you're not familiar with that concept. So looking down on a flat map, again, that's what we see on the right side over here, and the green is the outline of the extent of the Utica. And this formation and all these formations in here are in what is referred to as a sedimentary basin. So the extent of, or the edge of the green over here in Ohio is where the Utica Shale exists. It would be at the surface. If we go further to the west, there's no more Utica Shale because the topography is above the level of where this material was deposited. And then as we proceed to the east, the basin deepens, and here's the central point, and these yellow lines on here are thicknesses of or what are they? They're elevations. They're elevations at the base of the Utica Shale. So here it's 0. Over here it's 2,000 feet, and then it goes deeper. Here 6, 8, 10, down to 14,000 feet to the base of the Utica in the center of the basin, and then it shallows again. And over here in eastern Pennsylvania, it's 0. So the basin is like a bowl. Here's a cross section through the basin. The basin is defined as a region where sediment that is being transported in and deposited in a low area on the surface. As it continues to be deposited, it depresses and sinks down into the crust as that increasing weight begins to weigh down on the basement materials, which are typically a granite or some type of plutonic rock. And this basin is going to form again shallow on the one side to where there's 0 thickness, and then it goes increasing thicknesses, and then it's going to come back up in this bowl on the other side. So on this map in here, you can see where A is on this map. We're up in kind of central Ohio, and the Utica is about 2,000 feet deep. Okay, and then as we go eastward toward Pennsylvania, at the Ohio-Pennsylvania border, on this cross section, we're maybe 7,000 or 8,000 feet deep, and the deepest down here is about 14,000. So here's the cross section line So we would be dealing with something from up here 0, and then at the border, 6 to 7, down into the deepest part of the basin. This would be this cross section. So you can get the idea of what a basin looks like. Okay, well, thank you for viewing again this channel this week. Hope you enjoy this content, and that it's something that you can utilize in your day-to-day planning of fuel prices. So we'll keep watching Strategic Petroleum Reserve withdrawals. About 2 million barrels decrease in the total volume last week, and there's no real reason for drawing out of Strategic Petroleum Reserve. It's called Strategic Petroleum Reserve for a purpose. It's for strategic uses, and right now there's no strategic need that we need to be drawing out of that reserve. So this is something we're going to keep an eye on. Leave a comment below. Thanks for watching. We'll see you next week.